Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar surged on Monday amid thin liquidity due to the US Memorial Day holiday in the US. The Aussie reached an intraday high around 65.35, which is where the key area lies around 65.20.45, and from the rejection posts a shooting star. The market activity picked up after President Trump announced over the weekend that he agreed to delay the planned 50% tariffs on the European Union. Trump stated on Sunday that he would postpone the tariff implementations to July the 9th, following a request from the President of the European Commission. This follows Trump's initial proposal last week to impose 50% import tax on the EU starting June the 1st. Meanwhile, the dollar index, which measures the greenback's strength against a basket of 6 major currencies, slipped to a fresh 2-week low of 98.70. Looking ahead to this week, we've got the Aussie CPI, the US FOMC meeting minutes, and the preliminary GDP and China's manufacturing and non-manufacturing PMI. So therefore, could pick up a bit more activity. As we look at the Australian dollar, it did break above that 65 area, but still capped by, as I mentioned, that level of 65.20.45. I'm not bearish, but a little bit of profit taking is coming in, considering this is a highs around April. And if we do get a pullback anywhere towards 65.45 and maybe a short-term base around 63.80.90, as the 60-day moving average is lower at 63.25.35, could eventually see the market push higher through 65.45 and on towards 66 cents. The euro climbed higher against a weaker US dollar in terms of the President Trump's decision to postpone the threatened 50% tariffs on European Union imports, as mentioned, until July the 9th. Looking at the current pattern, it's likely to be a little bit weaker due to the holiday in the US, but nevertheless, all eyes will be on the German preliminary CPI, the FOMC meeting minutes, and as I mentioned, the US GDP and the core PCE price index this week. Overall, I feel the market has potential to climb higher, but it's got to get past the level of 114.5. A break there could give further scope on towards 115 figure 20, and do note back here in early April there was a bit of profit taking and may do so again. But overall though, the trend is bullish and the married RSI to the MACD should support this current climb. Turning to the bearish dollar yen, the market still weighs on the support level seen at 142.1020. I do anticipate a break there that could see a fall towards this key area seen in April around 140. Overall though, still be on your guard in case we see some profit taking coming back into play as we get closer to the bottom of the range, because we did see 2 days of strength. That is the bullish engulfing candle and the dragonfly or partially hammer that came into play here and caused a short-term correction back to 148. Overall though, the failed dragonfly that we saw back here, I feel the market is still likely to weigh on the support, but do keep an eye on that level of 140. A break beneath there gives little to our imagination until around 127 to 130 for support. Sterling still holds on to its gains after showing an impressive rally on Friday by strong UK retail sales at 1.2% in April, which is easing trade tensions. The data also highlighted resilient consumer demand backing the Bank of England's cautious stance. However, inflation remains elevated, with headline CPI at 3.5% and core at 3.8%, reinforcing a wait-and-see approach to rate cuts from the Bank of England. With no major UK data this week, the sterling focus shifts to the Bank of England speakers. So if you are trading this market, let's see if the rally since the break above 134.65 and clearing 135.70.80 could actually add further to the gains and on towards 136.15.45 to 136.90. Finishing off with commodities, a little bit of weakness come back into play here, but overall I feel the market can potentially break higher. Technically there are bullish implications here, and therefore looking for a break above 3,355 could see a stretch back towards this top side of 3,378 to 81. And wrapping up with oil, this little mixed pattern here may see a little bit of weakness into the start of the week due to thin liquidity, but towards the region somewhere around the level of 60.5 to 59.5 may find demand and eventually see a correction back to the top side of its range around $64 a barrel. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoyed the great start to the day.